Compound Nation. Welcome to the Compound. My name is Downtown Josh Brown, here with my co-host, as always, Mr. Michael Batnick. Michael, say hello to the folks.
You're too kind. Hello, folks.
We have a special guest, friend of the show. I think we could say that, right?
Absolutely.
I think
Friend of the show for sure.
Yeah.
Kyla Scanlon is here. Kyla is the founder of Bread, a financial education platform. Kyla puts out weekly financial-related content on her YouTube, TikTok, Instagram. She has a newsletter focused on human-centric economic analysis. We're about to find out what that is. Prior to founding Bread, Kyla was an investment partner at On Deck and an associate at Capital Group. Kyla has a new book out. It's called In This Economy, which I love. And it's an illustrated guide to how money and markets really work. That's a cool cover. I love it. Did you come up with the concept of like the ball of string that's like needs to be unraveled?
Well, it's a chart. That's a chart. Like that's meant to be
Okay.
the line go up on a chart. So, but yeah, came up with the color
It's
scheme.
also, it's a very unique shape. You don't see a lot of books shaped like this.
It's
I
a
love
Is that
it.
a perfect square?
No, but it's just, it stands out from the rest of them in a good way.
Yeah, that was the goal. I wanted something that when you walk into the bookstore, you're like, that book looks wild. And then you go and hopefully pick it up and then buy it. So
Very cool. I love the color. I love the design. So it's your first book, but you're a writer. You write a lot. So what did you want to do in terms of taking the writing that you're normally doing anyway? I know you have a big audience, and we'll talk about that in a moment. What did you want to do differently that the format of a book enabled you to do?
yeah, so I post social media videos like on TikTok, Instagram, LinkedIn, YouTube Shorts about once a day. And with social media, the news is something that you're always having to respond to. And so it can be a little bit difficult to do education. And so I really wanted to like have something static that people could go to outside of all the noise of like social media platforms and just have something that's like fun and accessible and talks about the economy. So there's 60 illustrations. Each chapter can be read all by itself. And that was the goal. It's just like, I think books are really important and I wanted to make something that people could read to have an accessible overview of the economy.
Kyla, I don't think I've ever read a book. And by the way, I love the book so much. I hope everybody buys it.
Thank you.
I don't think I've ever read a book that tied together money, markets, and the economy in one. Who are you hoping, when you sat down to write this, who are you thinking is the reader?
I mean, it's really anybody who wants to know the economy, which is such a cop-out answer, but I actually don't like that question because like books should be for anybody, in my opinion, in my like very opinionated opinion about books. So it's for anybody. And I guess like the target audience would be the people that I make content for. So like, 25 to 40, probably watch social media, like have some interest in the internet. It's really meant to be like this thing that isn't scary and overwhelming. Because I think that's oftentimes like how we approach the economy and economics education is it's something so dry and so boring when really it can be like totally fascinating. And so that's who the book is for.
What got you started talking about the economy on, it seems like it's a daily basis, right?
Yeah.
You've got something up each day. What got you started down that path? I think it's probably a pandemic era when a lot of people realized they had something to say and they had a lot of attention from a lot of people all of a sudden. Was that, do you think that was like the genesis of you saying, you know what, I got to explain these things?
Well, so actually, no. I started a blog in college about my options trading. Nick Majuli actually found it like very, very early on. He was
that's
reading,
so cool.
some of my stuff when I was in college. And so that's kind of when things began for me with economics education was, 2018, 2019. My last 2 years at college, I was like, people need to know about options trading, which in retrospectively, they don't. But that's how I started. And then, during the pandemic, I had worked at Capital Group, had worked at On Deck, and then left both of those companies during the pandemic because I was like, what's happening? And then that's when I started talking about, the markets was with GameStop. And so it kind of took off during that time, but I've been doing it forever. Yeah.
We live in an attention economy. And unfortunately, one of the best ways at getting attention is to be negative. And you've been able to break through. You're a shining star and you have a big audience and you're not putting out negativity. The opposite. You're putting out context and facts and opinions. And so when you see the tidal wave of bullshit that we drown in on a daily basis, I'm sure it drives you crazy.
Yeah, it's frustrating.
What do you think are some of just the biggest misconceptions about either how money or the economy or the market works that you're like, I can't believe I still have to repeat myself and debunk this nonsense?
Yeah.
If there's like one thing, what is it?
That we're not in a recession. Like that's a super big one, because people think that we are. And a recession is largely semantics at the end of the day. Like, it's defined sort of loosely by the National Bureau of Economic Research, but they're still defining it, and we're also nowhere near one based on all the metrics that they look at. And so I think that's like one of the biggest things is that people often perceive the economic circumstances as much worse than they are, and that's oftentimes something that I have to talk about, and that can be not hard, but it's just like how do we work through this?
It's weird to think that there are so many people, especially young people, who, and maybe it's not really like this in real life and it's only like this online. I'd love to hear what you think. But it's so weird that we could be in a situation with sub 4% unemployment and rising wages and record high stock prices and essentially for a lot of this period of time, 2 job openings for every 1 person searching, and still have conspiracy theories spreading all over social media that actually we're in a depression. Like, what do you think that's just people like spending too much of their time online and allowing the negativity of others to feed on itself? Like, what is causing this?
Yeah, I mean, I think it's like 2 main things. Like number 1, structural affordability. You can't discount how people feel because like there's elements of truth to it. Like there is a housing crisis. Childcare costs are up 32% since 2019. Elder care is $10,000 a month. So like there are real economic pain points. Inflation has been a pressure cooker for a really long time. People feel like they just can't get ahead. But then on the other side of all that, like how people feel relative to like how the economy is actually performing is like the discrepancy is huge. And I think a lot of that has to do with media headlines. Like there's a study out there that says that a negative word in a media headline increases the click-through rate by 2.6%, and a positive word decreases it by 1.9%. And so people are out there like really, not maybe searching for negativity, but that's what they're fed.
They are. Yeah, they are.
You think so?
Well, Derek Thompson talks a lot about this. They're being fed it because that's what they want. The
that's
media
fair.
is incentivized not to scare us. They're trying to make money, and the way that they make money is by giving the audience what they want, and the audience wants negativity.
That's a really interesting point. And Kyla, you famously did an op-ed called The Vibe Session that went viral. I think, was it New York Times?
Yeah.
Okay. Yeah. And because it just so perfectly encapsulated the moment, like it doesn't have to be a statistical recession in order for millions of people to feel badly about their own situation. And I think that's really, there's a big element of that. I think we need to make up a new word because recession is not applicable right now.
Yeah.
But it's also true what you said, that like a lot of people are not in a great situation, and largely because of affordability. So we'll brainstorm. We'll come up with a word to describe this and hope we never see it again. But to Michael's point, if your first job out of college is $75,000 a year and it costs you $50,000 to pay rent, fill your tank, pay your utility bills, and cover Netflix, and then like what you have left over is $20-something thousand before tax, and then you get a flat tire and it blows your budget for the month to get a new tire, like you don't want to read articles about how fucking great everything is. That's not what. So you are in search of confirmation bias. You want to hear that other people are as pissed off and deep in the struggle as you are.
Yeah.
So I think that's a really valid point.
Well, and this is like outside of the realm of finance, but Jean Twenge, who wrote the book iGen, talks about how like we've kind of shifted from an internal locus of control to an external locus of control. So instead of being like X and Y is my fault, it's like everything is everybody else's fault and everything is happening to me all the time. And I think that has something to do with it too. Like people circumstances are hard. Nobody's like doubting that, but also we're looking for places to place blame rather than having an element of agency and fixing some things for ourselves, I think.
But so the conversations online, like it's funny, there is a lot of nuance in economic data. There's a lot of economic data. Reasonable people can disagree, but we are not in a recession. Like that much is clear. But I think that a lot of the conversation online is not people arguing about data. It really is feelings. And
anecdotes,
And even though there is a housing crisis, and I would agree with you that the unaffordability is like a massive, massive issue for first-time home buyers, the vibes are better than they were. Where do you think and I'm like asking you to like make up how like the average person feels, but where do you think we are today versus where we were, say, a year ago?
I can't tell. I've actually spent
That's such a good answer.
Yeah, I mean, I can. I spend a lot of time thinking about this because I do think like how people feel ultimately really matters. Like, expectations shape so much of what actually ends up happening. So it's important that we pay attention to how people feel. I think in some aspects people are feeling better, but now we're getting weird prints in the labor market reports. Like JOLTS is no longer at all reasonable to look at. It's just like the survey response is too low and there's too many holes in the data. So I think people are feeling better, but now we kind of have this funny thing where it's like maybe the data is saying that things were worse than it was. And so it's kind of a weird time, as always. It's always weird.
I want to read you something from the Wall Street Journal over the weekend. The title of the article is Americans Really, really hate inflation.
Yeah.
And the gist of the piece is like people would, I know it's not true, people would almost rather lose their job than pay up 8% on their groceries every week. Like obviously nobody is saying that, but like that's what it seems like. So this is what I want to read you. Before the pandemic, John Steinson, an economist at the University of California, Berkeley, was sympathetic to the idea of setting the inflation target higher. Now he isn't, and the reason is simple. He's come to realize that Americans detest what economists like him thought of as relatively modest amounts of inflation. Consumer sentiment remains extremely low despite low levels of unemployment and continued wage growth, and the inflation experience in the past few years seems to be a major reason. Yeah. Even as the Fed's favored inflation measure has moderated from 7.1% hit in June 2022, prices are far higher than they were before the pandemic. And this is, so now I'm not quoting anymore. This is just, it's pissing people off. And they don't want to hear, well, you've just experienced the highest wage growth in the last 4 years that any generation of Americans has had since the 70s. That doesn't make anyone feel better. They definitely don't want to hear about stocks if they're in their 20s. What the hell does that do for them? So I totally get it. I'm really sympathetic to it. But one thing that our colleague Ben Carlson would remind us is like every generation has their challenges. So housing affordability is this generation's challenge. A prior generation graduated college into an economy where nobody was hiring 15 years ago.
Me.
And like would the graduates of the class of 2009 trade places with people who are in their early 20s now? I think they probably would.
Yeah. And I think the problem with all of this is that the negativity is amplified by social media. So like all of those generations had their own crises, of course. Like life has never been easy. And I think now it's just everyone's talking about it all the time. And the flow of information is like breaking people's brains. And so I think that has a large part to do with it. And there's also this idea that, to your point of like, you're spending all your money on everything. And then if you have a flat tire, you're screwed. There's no social safety net in the US. And that can be really tough. The uncertainty of that, I think.
So, but not to beat this dead horse, but it's so important because I think Josh's point earlier, like when you go and talk to people, are people as pissed off as it seems like they are online?
No.
I don't think so. They're not.
No.
They're just not.
Yeah.
And the reason
I think it's an internet thing.
It is,
Totally.
and the reason why it's so important is because internet people can shape the mood, and the mood can shape policy. And if it's not accurate, it has serious ramifications.
Yeah. I've been thinking a lot about that too. And like the theory isn't fully fleshed, but like there is this kind of bifurcation between the online and offline. And even like when you meet somebody who's or who's online and you meet them offline, you're like, oh, this is like fine. So it is definitely an internet phenomenon, but you're right. Like that's where discourse happens. That's where policy is shaped. That's what policymakers are paying attention to. Like the Fed
they
has
are.
a Twitter
Right.
index, right?
Kyla, I've met people, and I'm sure you have, whose Twitter persona is, let's just say, of the negative bent. And then you meet them online, and they're like totally lovely, and it like almost makes me mad. It makes me like more mad.
Yeah.
You know?
Kyla, are you in Brooklyn?
No,
Oh, you're not. Okay.
She's in the Brooklyn of the West. Wait, are you
in
still?
in
I don't know.
Brooklyn.
No, like, are you still in Denver?
You're in Denver. Okay. I feel like 1 out of every 2 people who's extremely online is from Brooklyn, and then the other 1 out of 2 people is from San Francisco, and that, like, without a doubt, what you're saying is so important. You have an overrepresentation from people that work in
Especially on
certain
Twitter.
industries.
Yeah.
Like obviously, media, journalism is one part of it, and tech is the other part.
Yeah.
So for the tech people, they're doing really well personally, but if they live in Northern California in the suburbs of San Francisco, it really feels like end of the world times in some respects, just given like the state of the city they love.
Yeah.
And then if it's the Brooklyn cohort, who again very overrepresented amongst media and journalists, the prices that they have to pay just to stay alive on a daily basis are absolutely insane.
Yeah.
And like I do agree, like it's not a real snapshot of how the consumer feels, but it's also not a snapshot because these are influential people. The things they say and believe end up on TV, in articles, in policy papers,
The headlines.
being discussed in Congress. Like they're important, they're influential.
Yeah, and they're loud. Like any, you know.
I'm loud. So I can't,
Well, no, it's like a
can't
different.
comment.
Well, it's a different type of loudness, right? Like it's very much like a self-serving sort of narrative that I think can really sort of mess with people. But I do think it it obviously bleeds into the populace. And we don't have to get into politics, but like you just see that like reactionary wings are popping up all over the world. Like look what's happening with Europe and in France right now. I think there's something, people are uncertain and they're afraid, and so that's transitioning into this underlying fear that is very prevalent.
Do you think
Why is
that,
it important? Oh, I'm sorry, Michael. Go ahead.
Kyla, do you think that we're ever, so we spent the past 15 minutes discussing like the feelings and the data and the disconnect. Do you think that we're ever going to move past this where we could all agree like, okay, we're back to normal? Like, is that ever, are we kidding ourselves? It's just going to be like this, no?
I think so. So Connor Sin has a theory on this from Bloomberg Opinion, where because we have the internet, everybody can kind of go into their little corners, and all of the discourse is like, how do you say, like separated? It's divided versus everybody listening to like one radio show in the 1950s, right?
Yes, the fragmentation. We're never going back.
Yeah, exactly. It's probably just going to get worse.
There's
Awesome.
There's only 2 things that like we all agree on, and even that we don't all agree. Like we all agree on Taylor Swift, but like not all of us.
Like we like her,
It's
don't.
Well, it says no. I think it's something that unites everyone is that they're aware of her.
Oh, sure. Yeah.
Like like in a way that like everyone living on the planet in the 80s was aware of Madonna and Michael Jackson.
And what's the other,
then-
the Meg?
No, yeah, the Met. No, I don't think we have a shared pop culture anymore, which is fine. We don't need to. I think fragmentation's fine. We don't really have like the 3 news networks that we all get our news from.
And nobody watches those channels really.
Nobody's
It's
watching those
crazy.
channels.
Yeah.
When you wrote the book, or when you were thinking about the idea for the book, or just in your daily broadcasting, like, why is it important for the regular investor who's not trying to manage a hedge fund to understand the way the economy works? What do you think is so important about that connection?
I think it's people's civic duty, actually, which is like a big take and obviously like very opinionated. But I do think like if you're going to exist within an economy, that you impact by like having a job, by spending money. Like it's your responsibility to understand it. And I just think that like my theory is that if people understand the economy, they'll understand what's happening around them a bit more. It'll sort of reduce the fear, the fragmentation that we're seeing, help enhance certainty. And I just think it's really important. Like the thing I always say is like we all know that mitochondria is the powerhouse of the cell, and I feel like we should know how the Federal Reserve operates in that same way.
Okay. And do you think people will make better decisions with their investing if they have a better understanding of the economy in which their investing is taking place in the like is that connection going to make them do smarter things with money?
I would hope so. I mean, I think that like the biggest thing is mortgage rates, right? Like if you understand what mortgage rates are doing and why they're doing what they're doing, that'll really help. If you can understand the cyclicality of the economy, like what businesses might do well when, that also really helps. I just think any sort of baseline understanding, any sort of foundational knowledge, it should help investing. Like even if it is science or something like that, like just having the basics is good.
How do you explain to people what the economy means for the stock market?
Oh, so the economy and the stock market are not the same thing, right? You all know that. So I just say, like, you know, what the economy is doing can impact how businesses function. Like, if the economy goes into a recession, like, that's going to hurt some stocks. It'll help other stocks. But how you think about the economy and what it does is ultimately going to influence how most companies hire, how they fire, how they pay people. So it's all tied. Like, you know, the thing I always say is people are the economy in the same way that, you know, people are the stock market. It's all composed of the same base layer.
Do you think that the biggest source of conspiracy theories around investing are based on the Federal Reserve and, you know, it getting a lot of things wrong in recent years? Like, obviously, skepticism about the Fed is well-founded. It's no institution or government agency is infallible. But do you think that that's like ground zero, or do you think, as evidenced by the recent relaunch of the meme stock wars, do you think it's Wall Street that people distrust more? When you talk to your audience, like which one of those two things do you think is it, or do they conflate them?
I mean, I think people see the Federal Reserve as a black box, like they're not really sure what it does or why it exists or, you know, how it takes direction from Congress and what it ultimately does. And the big meetings are really confusing because it's like, you know, Jerome Powell in a tie saying things and then stuff happens. So I think that's just confusing because it's like what's happening and it's so theatrical. But then Wall Street, I think people are just frustrated with Wall Street and maybe like some thoughts around greed, et cetera, profit taking.
What element
pricing.
of Wall Street are they frustrated with? Because you could throw darts and double your money over the last couple of years.
Well, I'll give you one. I'll give you one
without much of a problem.
That keeps coming up. Like the private equity companies are buying all of our houses.
Okay, that's a good one.
It's not true though. That's like
I know. How many times have you debunked?
Yeah. Well, even when I
it's
debunk
true that
it,
they're buying houses. It's not true that they're
not buying all of
keeping
them.
other
They're not
people
buying.
from buying houses.
And like as a percentage, it's very, very low. But then you get called a liar, or an agent of the
Shill.
state. Yeah. What do you all see? Like, what do you see with people talking about the Fed and Wall Street?
The people doing the craziest shit with their money are the people who seem to be the most likely to say the market is rigged.
Yeah.
Like if you just bought the NASDAQ 100 and didn't with it for the last 10 years, you're compounding at like 26%. It's almost like winning the lottery. Mm-hmm. Like if you just did that and weren't buying weekly call options, your impression would not be the market is rigged. Your impression would be, holy shit, the market has just increased my wealth while I ate, drank, slept, and went on dates. How did that happen? So that's one area where I don't understand. It's like, oh, I'm going to trade all day long and do really reckless things that are so reckless that I'm actually taking screen grabs of my phone just to show people how crazy I'm being. And by the way, the system is rigged. What?
Yeah.
It's like driving like 100 miles an hour and crashing and then blaming like the government for the road
The road,
safety.
no, the highway,
the
the highway.
There was a bump in the road.
External locus.
Yeah.
Yeah, the highway was rigged.
Yeah.
I think
The highway wasn't rigged.
One of the things that keeps coming up over and over, and this is just a human condition, will never change, is that when you're online, you're talking to people who share nothing in common with you. oftentimes. They could be different socioeconomic, different geography, different age, different motivations, different everything. And one of these pervasive feelings is that I'm doing okay. You feel better about the local level, but the national economy is going to hell.
Yeah.
And that's not unique. That's not unique to now. Like that's always been the case, but it's especially true today.
Yeah.
Now that we have access to more people.
We have more access to each other.
Right.
Yeah. So do we think we should ban online interaction, or would the more pragmatic solution be to figure out a way to filter everything that we're hearing and seeing, and maybe like remind ourselves that there's a bigger picture that maybe we're not hearing about online all the time, and maybe that's what your book is really meant to do.
Yeah, I mean, I'd be a hypocrite if I said that we should ban the online, because that's my job and that's how I got my start. Like, was literally just through Twitter. No, but
Don't worry. No danger.
I think it's a super important caveat, because like I'm aware of the stance I have and like how it can sound hypocritical, and I'm aware. But I do think like, so I'm getting on a soapbox just for a second, but like I do think social media can be a tool, and like you have to go where the bad things are to make them better. And that's what I try to do with economics education, is like people are gonna be scrolling on TikTok regardless. And so if you throw in an econ video in between the scroll, like hopefully that'll help just a little bit. But yeah, I mean, I think it's like a beautiful thing that we've created. And I don't know if it's just human behavior has made it kind of a cesspool. I'm assuming that's it. But I think we can continue to like build on top of it. But man, I think it's kind of the responsibility of the platforms just to fact check stuff, because there's so much misinformation and like bad information flowing around, even about investing, where it's just like we probably should have somebody saying, hey, this guy's like totally full of it, you know?
Well, I wouldn't hold my breath waiting for the responsibility of the platforms. There's like 12 fake Josh Browns running around selling
and
selling
taking people's
penny
money.
stock chats
Yeah.
and crypto, and they don't seem to respond to takedown requests. What was the most challenging part of the book to write? What did you have to like really research the most to make sure that you were going to nail it?
So I have a problems section at the end, which is kind of similar to what we've been talking about throughout this podcast, where I talk about social media, I talk about immigration, talk about healthcare, talk about education, like all these various crises that we're facing. And even at the beginning of the chapter, I say this was the hardest chapter to write, because it was. And then I go on to talk about the opportunities. But like those two chapters for the problems and the opportunities were extraordinarily hard, because it's hard to talk about the issues that we're facing. And it's even harder to come up with solutions.
What are you most optimistic about in terms of your generation coming into their peak earnings and investing years, which is not yet, but right around the corner?
Yeah.
What gives you like the good vibes versus the bad vibes about how things are going to go or what could happen?
Yeah, so I'm 26, so I'm a Gen Z cusper, so I'll speak to that. But I mean, I think that people
That's
are...
the term, Gen Z cusper?
Yeah,
Okay.
well, I'm like an old Gen Z. Like, I don't relate to some of them,
Yes.
but
Okay.
I'm technically that. I mean, I think that, like, there's a lot of people working on really cool stuff, like a lot of young founders who are doing a lot of really interesting things. I think that I wrote this piece for Fast Company about a year ago now, talking about how the younger generation was going to approach work. And I think you just see people, like, following their passions, which might be good and it might be bad, but they're much more likely to, like, quit a job that doesn't serve them, and to go and seek out something that will. And so I'm hoping that it'll be a generation that's pretty satisfied by the work that they're doing because of that flexibility.
The hybrid work situation, home and office, has been incredible for a lot of people, myself included, but it's been really challenging for others, and especially young people. One of the ways that you improve your professional situation is an older person will recognize you. And the way that they recognize you is by being around you. And it's really hard to show off in front of a computer screen. What are you hearing from some people that are in that situation? Is the hybrid work a good thing? Is it bad? Is it mixed?
Well, it is definitely frustrating. So when I graduated, 6 months later, the pandemic happened. So I was in my first big job, like trying to make a good impression, and it's really hard. And so I do think a lot of people are feeling that, where it's like I can't get ahead. People are also not retiring at the rate that they used to, like staying in jobs much longer. So there's not as much turnover and maybe not as much opportunity. And what's actually interesting about this is you see young people turning to trades. Like the Wall Street Journal had a big article about Gen Z being the tool belt generation and maybe not going to college as much. And so I think that's like a big thing, is that people are, maybe it's a more entrepreneurial mindset, not approaching the beaten path so often, but it's totally hard. And it's also super isolating as a young person, because you can't pick up on social cues if you're doing all your work from home. And then when you're like at a conference, you're like, oh my God, how do you like speak professionally? It's tough. Yeah.
Yeah. There's also all these moments that are unscheduled and not part of a meeting.
Serendipity. Yeah.
And you bump into a colleague in the hallway and they share something with you that would not be slacked. And, there's definitely some elements of that. My daughter graduated high school yesterday.
Oh, congrats.
And thank you. And what's not the valedictorian? What's the runner-up? The vice valedictorian? What is it?
Salutatorian.
Salutarian? All right, whatever. The vegetarian said reminded us all, not that we needed reminding because we were the parents, but reminded the audience, this graduating class was the class that started high school in the fall of 2020 with masks on.
Wow.
And not only that, at the high school, they put plastic dividers in between, because you couldn't separate the desks any further because the classroom is only so big. So they had like half the week off. Like literally, if there was a scare, if somebody in the community tested positive, they sent everyone home for 2 days. I don't even understand where any of this stuff came from. They had plastic in between their desks, but that's this. So they're not cusp Gen Z. This is hardcore Gen Z. But these are the people going to college, and they'll be in the workforce before you know it. And I do think that there's some element of like they've survived a lot of stuff that none of us had to survive when they were 15 years old.
Yeah.
Like they had to like just deal with the bullshit of their Gen X parents and boomer grandparents to a degree that we just didn't. So I'm hopeful, because like these are not kids that have gone through nothing. They really had to adapt. So hopefully they'll be a very adaptive generation, and they'll have that as one of their tools in the tool belt. What do you think about that?
I mean, I think it's true. And even with the older Gen Zs, like I was born right into the tech bubble, so I don't remember that. But like, I was 10 when the great financial crisis happened, so I wasn't graduating into it, but I did see how it impacted my parents. And so like that's super formative as well. And then of course, like the pandemic, graduating college. But yeah, I mean, I think the younger generation has shown a lot of tenacity. What they went through at such a young age was extraordinarily difficult. And so I do think they'll be adaptive, and they'll think through things, and they'll just sort of take the punches as they come. I do worry that there's a sense of nihilism and like maybe a lack of hope. And that's kind of something I worry about. But yeah.
Well, they'll get past that when they figure out that they want to date and start families. There's no nihilist families being formed. So I think they'll grow out of that. Michael, hold up the book one more time.
Yeah, I would just say buy the book. If you don't think the book is for you, well, I don't know why you're watching, but if you don't and you have somebody in your life, younger, older, who you think this would help, I can't recommend it highly enough. I learned a lot, and I loved it, and congratulations.
Thank you.
Kyla, it's on sale, bookstores everywhere?
Yeah.
Okay.
An audiobook is narrated by me.
Of course. Who else could do it? And I hear it's rocking. I hear people are buying it. You're getting great feedback.
Yeah, everybody's been really kind. It's been, and thank you all. You all have been super supportive since like the very, very beginning. So thank you.
We haven't asked for our favor back yet. So
anytime.
And Kyla, I followed some of your early options trading strategies, so thank you. Very profitably.
Did you lose like $1 million?
Kyla, we're huge fans of yours, and when I'm scrolling Instagram and Kyla Scanlon pops up to break something down that happened with the economic data that day, I watch. I favor it. I think you do an amazing job. I think you're an awesome representative of your generation, and want to wish you all the best with the book. Hope our audience grabs a copy of it, and wish you all the best with it.
Thank you. Thanks for
having me. All right,
me.
Cheers. Hey guys, that's been Josh, Michael, and Kyla Scanlon. Thanks so much for watching, for listening. We'll see you soon.